Here are 11 steps needed to house hack your primary residence. So, step number one is know your budget. So, typically, when you buy a primary residence, you can do 20% down, 10% down, 5% down, 3.5% down, depending on your loan. So, know your market, right? So, for me, I'm in Southern California. Let's say the average cost of a house is $1 million, and let's just say I want to put 5% down or 10% down, then I need to have at least $50,000 to $100,000 for my down payment. So it's really easy to know your budget and know your market price. You just can go onto Zillow, Redfin, Trulia, any of these sites, and at that point, you can kind of see what the average market price is. In Southern California, it's about a million. In the Bay Area, where I grew up and own a few single family homes, it's around 1.5 million. So for me, I like to do 10% down personally. It's a lot easier in terms of the math. Your loan's not going to be as big and it's not as intimidating, right? So for me, I was buying houses around $1 million. 10% down is $100,000. So it was pretty simple math for me. I need to save $100,000. And, if you know your savings rate, whether that's $5,000 a month, then you can kind of do the math backwards where it's going to take you about 20 months to save up for that down payment. So, step number one is know your budget. Step number two is you want to get pre approval from a lender. And typically, to get pre approved from the lender, they want to know what your debt to income ratio is. So, what does that mean? So, the lender, the loan officer is going to ask, okay, what debt do you have? Do you have any student loans? Like me, I had $250,000 of student debt. If so, they're going to ask you, what's your monthly payment? Do you have any credit card debt? Once again, like, what's your monthly payment? Do you have any car loans? Any personal loans? Any type of loans that you have, they want to know because that's part of your debt. In terms of your income, obviously lenders will favor W-2 income, unfortunately, over 1099 because it's seen as more safe and stable. But typically they're going to ask for some recent pay stubs. You can get that through your employer. It's pretty easy to download. Might ask for some bank statements, and at that point, once you kind of show your debt to income ratio, they're going to say, okay, you're pre-approved for this loan amount, right? So let's just say whatever, you're pre-approved for $900,000 loan. So if your house is $1 million, that means you either put 10% down. If your debt to income ratio isn't as strong, you might have to put a larger down payment. So you'll know at that point as well, right? So let's just say I want to put 10% down. I only have 10%, but in order to qualify for the loan, I need to put 20% down. In that case, you either get a cheaper house or you have to spend more time to save up more money, right? So, once again, for me, I was a high income W-2, pharmacist. Um, I just paid off my student loans. So that was the only debt I had. Fortunately, I didn't have any credit card debt. I didn't have any car loans. I drove a very simple, used car. And credit card debt, I paid off every month. That helps build up your credit score. And, when you have multiple loans that you're paying off on time, that's how you improve your credit score as well. So I kind of forgot to mention, but the lender will probably run a credit check on you. And, if you're paying off your student loans, if you're paying off your credit card, if you're paying off your car loan, your personal loans, and you put it on auto pay and you're paying off every month and you own these loans for a long period of time, once you have a good credit score of, I would say at least, 640, 680 plus, that's how you get the best loan terms. Don't be discouraged if your credit score is not that good. Just, work towards improving your credit score, setting up auto pay. But just know that if your credit score is below 640 or 680, then, you might have to pay a higher interest rate, right? But it's still worth it because, real estate's a long term game. You have to think long term with real estate. So step number two was, get pre approval from a lender. If you know any lenders, that's great. For me, my aunt was actually one of the top producing loan officers for US Bank. So I used US Bank, right? But you can use any lender you want, right? Whether it's Wells Fargo, Chase, US Bank, local community bank, whatever that is, right? Don't overcomplicate it. For me, I just had a family member who was a loan officer, and she served as my loan officer. But if you don't have that, you just can ask for referrals. There's a lot out there. You can work with mortgage brokers for who do single family home, and they'll work on your behalf as well. So there's many ways to do it. Don't overcomplicate it. The key is you just want a pre-approval letter because it looks stronger to show when making an offer, as well as what your purchasing price is, right? You need to know what your debt to income ratio is, how much loan you qualify for, and how much money you need down, right? So it kind of helps set the bar there. So step number three is, find a realtor. So, for me, once again, I was very fortunate that one of my aunts was a realtor as well. But, a lot of people are realtors out there. If you look on Zillow, Redfin, or ask for referrals, you can find, a lot of realtors out there. There's so many out there. Unfortunately, not many are that great, as I talk about on my channel. But what I do is if it's someone that I know, I usually will say, hey, like, need to find a realtor. To be honest, I'm gonna find the deals myself on Redfin and Zillow, and then all I need you to do is, write offers for me, and then show me the houses. I'll show up on time. I'm really serious about buying a property. I look to close on my first single family home within 3 months, and so basically the concept is you want to tee it up that you're very easy to work with. I'm already pre-approved. I know what I want. I know the price range I want. I'm going to consistently find properties myself. But as a result, you want to ask for 1% of their commission back. And, what's kind of nice about this is it helps cover your closing costs, right? Like closing costs for single family homes is typically around 1%. So, if the realtor gets, 2.5 or 3% commission, you're asking for 1% commission to help cover your cost and make it known that you're easy to work with. And I know a lot of people are afraid to ask for this, but just based on my experience, like I worked with a realtor who was my aunt, a realtor who wasn't my family member, and I would ask up front, like, hey, can I get 1% commission credit so I can cover my closing costs? I'm trying to buy my first house. Honestly, I'm gonna find the deals myself, and if there's open houses, I don't need you there. But if it's something that's locked, and I might need you to open the door for me, right? So it's a really easy job, right? To be honest, writing offers, showing houses, it's really easy. I'm pretty dedicated to wanting to buy a property. Where realtors waste most of their time is the people who aren't serious. Like they say, like a lot of people say they're serious about wanting to buy real estate, and they'll like go to open houses, but they'll do it for like 6 to 12 months and never take action. Those are the type of clients that waste time for realtors. But if you make it known that, hey, I'm really serious, we'll make offers on a property. Here's proof of down payment. Here's my pre-approval letter. Like I'm really easy to work with. I'm gonna find the deals myself. Obviously, if you find deals, send it to my way, and I'll let you know if I'm interested or not fast. So it's a give and take, right? Like I'm gonna make it very easy. I'm very certain that I'll close, but you for you'll get paid a little bit less, but it's guaranteed money, right? So obviously it helps if it's someone that but if it's not, just tell them up front that this is what I want, and if they don't want to work with you, then it's fine. There's so many other realtors out there. Honestly, most of the realtors that I worked with, they didn't really do much besides the paperwork. And once I transitioned to buying multifamily, I do the paperwork myself. Like I don't even have a realtor or broker help me. It's like super easy, right? It's like I've never had a realtor give me any additional value that I couldn't find myself, right? That's just the unfortunate truth, but that's just been my experience. So number three is find a realtor, um, and then for the sake of just writing offers as well as showing houses. The next step, number four, is you want to search multiple cities on Zillow for houses with at least 4 bedrooms, right? So what I did was I just searched where I'm from. So, I kind of grew up in the San Jose area. So, I started searching in San Jose. And then you want to expand to nearby cities within a, 45 to 30 mile radius, right? So, I started in San Jose, then, realized it was too expensive. I looked in Fremont, too expensive. Newark, too expensive. You look in Hayward, maybe that area, the crime's a little too high. So, you look in Pleasanton, okay, it's a little bit expensive. Dublin, a little bit expensive. Livermore. So you just slowly start to expand your bubble, right, of areas that you know. Because, obviously the city where you grew up in and where you're from. And then from there, you kind of slowly expand and increase your bubble because you want to increase your odds of finding a property and not be as picky in terms of the location, right? Like, so for me, how I picked it was okay, where I grew up in San Jose was too expensive. So what's the next city over? It's, Pleasanton. Okay, it's too expensive. What's the next city over? Dublin. Too expensive. What's the next city over? Livermore. Oh, hey, this is more affordable. The homes are around $800,000 when every other city was around, $1 million plus. So I just said, okay, it's in the path of progress. Eventually it's gonna be worth $1 million, and I was right. Today it's I bought for 800,000. It's worth $1.3 million today in 6 years. So you want to look, and you can filter on Zillow and Redfin by the number of bedrooms. So for me, I prefer just single family homes. Townhouses and condos. They don't appreciate as well with single family compared to single family homes. Excuse me. So you want to just search on Zillow, Redfin, filter by at least 4 bedrooms, filter out the townhomes, filter out the condos, and once again, what's nice about that is more bedrooms is more income, right? So more bedrooms is more income. So more bedrooms is more income, right? So let's just say I'm able to rent out each bedroom for $1,000 a month, utilities included, unfurnished. If I have 4 bedrooms, I'm going to live in one and I have three to rent out. So that's $3,000 a month. Versus if you get a 3 bedroom house, you live in the master bedroom and then you rent out 2 rooms. That's only $2,000 a month. But to be honest, from my experience, the price difference between a 3 bedroom and a 4 bedroom doesn't really vary that much, right? So like, why would you not pay, let's just say $50,000 to $100,000 more, and if you're doing 10% down, that's only another $5,000 to $10,000 more, but you have the potential to make $1,000 to $2,000 more per month, right? So this will help cover your mortgage. So for me, I always try to target at least 4 bedrooms. If you can get 5 bedrooms, that's even better. But at least four, right? So I don't do three, I do four plus. So 4 or 5 are the houses that I'm targeting, and you'll see it yourself when you start looking. Like the price of a 4 bedroom is only a little bit more than a 3 bedroom by $50,000 to $100,000, depending on your market. That's what I was seeing in the Bay Area, and I was just like, well, like I said, if I pay 5,000 to 10,000 more in down payment, 10% down, then I get a $1,000 more. It helps cover my monthly mortgage better. So why not, right? And then these properties appreciate better as well, right? Like you want a 4 bedroom house because it's good for appreciation and it's good for cash flow. So step number 4 is you want to search multiple cities on Zillow, Redfin for houses with at least 4 bedrooms, and you can set those filters. So step 5 is you want to go to as many open houses and make multiple offers. At this point, it's just a numbers game. You want to go as many open houses as possible in different cities because you can learn the market, right? You can meet realtors. You make connections. You can kind of see what it looks like in person because on Zillow it might look great, but once you're there in person, maybe the neighborhood doesn't look that great, right? Maybe it's in a bad neighborhood. Maybe the layout's awkward. Maybe there's a lot of um, traffic there. There's some things that you can only see by seeing in person. I mean, you can do Google Street View of the address and get a sense of it, and do Google Earth and see the area view. But it's good to go to as many open houses as possible. So for me, what I did was I would just go on the weekend, right? Like I worked Monday to Friday, and then on Saturday, Sunday, that's typically when the open houses are. That's when I'd go. To those open houses. But let's just say there was an open house, then you need your realtor to open the lockbox and they can show you after work. So that's what I did a lot. And to be honest, I was really busy, and because it's a numbers game, I would literally make an offer on the property before I even see it. So literally, I just would offer whatever the price was on Zillow, whatever the price was on Redfin. So, back when I was looking in, 2021 in Southern California, the price range was around 750K to 850K. So literally, I knew it was going to go over bidding or over asking, but I just would make an offer at asking just to be more serious. And, if I saw other realtor there, I would be like, hey, like, I'm Steven, I already submitted an offer at asking price. And they take you a lot more seriously when you already made an offer, because all the realtors care about, to remember, is they want their commission check, right? So, it's just a numbers game. I know a lot of people, when they're buying their first single family home, it gets very emotional. They nitpick a lot of small things, but remember, you're just house hacking this property. You're going to live in the master bedroom, and you want to rent out the other rooms, and you're going to continue to repeat this process over and over again. So that's how you kind of do it. So remember, once again, remove that fear. Make offers sight unseen, view the property. You'll learn more about the market, and you know what the true price should be, right? Like, let's just say I'm asking price is always 800,000, but after the bidding war, it's always $1 million. Then realistically, the house is going to be about $1 million. So step number 5 is go to as many open houses, and you want to make multiple offers. Remember, it's a numbers game. So step number 6 is if you make enough offers. So to me, I typically average around 30 offers, just for context. And typically I would get something under contract within 3 months of me looking, right? So that's about 10 offers a month, and about 3 months to get my first deal under contract. At that point, once you have under contract, you want to send the purchase agreement to your lender, and then as well as the title. So remember, you got pre-approved, and then for title, typically you can just use some generic one like Fidelity, First American, or whatever your realtor wants, or whoever the seller wants to use. Right? Pretty easy process. Don't overcomplicate it. At this point, they're going to ask for a lot of documents between the lenders and title. So the lender is going to ask for like pay stubs, bank statements. If you already owned rental properties, they're going to ask for lease statements, mortgage statements. How much is your property tax? How much is your insurance? Um, they're going to ask for anything related to your debt and to your income, right? What's your proof? Is your bank statement, pay stub, like, what are your expenses? Because they're basically trying to finalize your debt to income ratio, and then they may run another credit check, right? Because from your pre-approval to, when you have a property under contract, it might have been 3 months, and your credit score could have been adversely affected or improved, during this time window. So, at this point, you're just doing a lot of paperwork. You're going to do, property inspections as well. Typically cost $500 to get this inspector to come. They'll inspect the property, they'll look at the roof, the water heater, the AC, HVAC, plumbing, and then they're going to see, anything needs to be repaired, anything major. A lot of properties are sold as is, but, you can always ask for seller repair credit, right? Like, even though they say as is, if it needs a new roof, like, I'll ask, like, hey, can you throw in, 30K to get me a seller repair credit? So, you're going through that. You're going to do an inspection yourself, before you close with the realtor to make sure there's no damages since the initial property inspection. And then, you should close in about, 60 days, right? So the moment you close, congrats, hooray, you get the keys. The house now yours, right? So now at this point, what I typically want to do is, obviously you're gonna have to clean up the house a bit, touch up, make some repairs. And now that you own the property and the key's yours, you can do this actually while you're close to closing, but you can start to research the market rents for renting by the room. And, for me, I personally included all utilities, just to make it simple. So I included utilities and internet. It's a flat fee, so I didn't worry about like splitting, the water bill, gas bill, electricity bill, internet. Like, I just kept it real simple. Just raise the price, to encompass those utilities. But just easy. Like, okay, so for me, I would look in the market, right, and I would see, okay, this room is furnished, um, and they're renting for like $1,000, right? So for me, I thought initially, okay, well, if mine's unfurnished, maybe I can do 900 or 950. But what I learned was, to be honest, it doesn't matter if it's furnished or unfurnished. You can get the same amount of rent by the room. some people prefer bringing their own furniture, so I lean towards a route of initially I had furniture in there, but once I kind of learned that from my second house hack, I actually didn't include furniture, and I got the same rents, right? So just research the market. So I looked on Facebook Market, I look on Craigslist, and you see the ads, right? Hey, rent by the room, all utilities included and or not included, or it's month to month. Just research it on Facebook Market. It's pretty easy. Just look, up the city, like whatever Livermore, and then you'll see how much the average room rents out for. And at that point, you kind of know how much you get, right? So for me, I kind of knew it was about $1,000, for the room. And if the room had a private bathroom, then I would maybe make it 1,100, right? So that's how I kind of research my market. So I would know, okay, I have two rooms that share a restroom, but with two sinks and a shower. So I get 1,000 each, and then I have a room that has its own private bathroom, so I get 1,100. So I was expecting to get around 3,100 um, a month, and it actually covered my mortgage, right? So that covered my mortgage payment. So I had to cover the utilities, the property tax, insurance, and any repairs. So my mortgage payment was covered, which was nice, and I was living there for like $1,500 a month, right? And I was paying myself and building equity. So just do your research, and at that point, you want to create your Facebook. Step number 8 would be create your Facebook or Craigslist ad. The best research is just putting it out there, and then if there's no response, then maybe your price is too high and you have to lower it by $50. Or if you have a lot of response, maybe there's potential to raise your price a little bit, right? So on the ad, you want to show pictures of the room. Obviously you want to show pictures of the house. The common areas like the family room, the living room, the kitchen, the bathroom, the exterior. And on the Facebook Craigslist ad, I actually wouldn't put the actual address. I just would put the area location. And then once they actually reached out to me, that's when I would disclose the address, right? If they were more serious and gave me all the documentation. But, on the Facebook Craigslist ad, you want to, are you offering month to month? If you do offer month to month, then you'll get more interest, but you'll get more turnover, right? So there's pros and cons. But if you require like a 6-month lease or a 1-year lease, then you want to be very clear on your ad. You want to list your document requirements. So for me, I want 3 month of bank statements, recent pay stubs, proof of emergency funds. So I know that if you lost your job, you can still cover the payments. What's your credit score, and you can pull it up on the banking app, and you can do a background check, and take a picture of the photo ID as well, right? So those are the documents that I did. I kept it pretty simple and easy. You didn't want to overcomplicate it. And then at that point, you would list like what's your rent, and then for me, I made my security deposit 1 month's rent, right? So if my rent was $1,000, my security deposit would be $1,000 as well. And then at this point, you want to include what utilities are covered, right? So does your rent include all utilities, or do you split it? Like for me, I kept it very simple. I just include all utilities, so they just knew every month $1,000 or 1,100 is what they need to pay me, right? So sometimes simplicity wins, right? Like keep it simple, stupid, right? Like don't overcomplicate things. Just keep it very simple. You're nitpicking here pennies, right? So they rather you just increase the price and then just include all the utilities. That's what I did. So step number 9 is you want to pre-screen potential tenants on the phone and then do it in person viewing, right? So if your gut says no, then move on to the next tenant, right? Like if there's something off about this tenant based on the conversation or something in person, just move on. Like your gut's probably right. If there's something feels off, remember you're gonna be living with this person, right? So if you already feel comfortable from the get go, then move on to the next one. For me, I personally targeted working professionals who are rarely home and they rarely cook, right? And why? Because I live in the Bay Area. There's a lot of tech workers, so it's easy to get working professionals. They're working at least 8 hours a day. They're rarely home. They're very active. Like they like to go out. They eat outside. Hang out with friends, or maybe they only stay there for like, Monday through Friday. On the weekends, they go home to their family, right? So like that way, you have the whole place or the place to yourself on the weekend, and you have more privacy. And then, obviously you rarely cook, right? As a single person, it's actually more effort and more work to cook for yourself versus to go eat out, right? So a lot of them would, buy stuff to go. I live near a lot of like restaurants, so it's easy. Or they, Uber Eats. It's very convenient now. Um, or a lot of tech companies, they give you food at the company, so they would eat there, or bring food home from the tech company. So they would mostly just use a microwave, or they would do like microwave TV dinners. So people who are rarely home really cook. Like I said, it's more privacy for you, and it's less of a mess, right? So like for example, I rented out to one nurse, and she would work 3 12s. She'd work the night shift, and she would barely be there, to be honest. And then on their 4 days off, she would just go back where she lived, which was in Sacramento. So they just want a place to basically shower, do laundry, and rest, and relax. And otherwise, they would just go home. So to me, that's the perfect type of tenant. More privacy for you, less mess, right? The more you cook, the more mess. If they're always there, kind of compromises your privacy a little bit, right? So step number 10 is, once you found your tenant, you want to set boundaries, set expectations, right? So typically for me, I would designate kitchen cabinets. I would say, hey, these two cabinets in the kitchen are yours. And you want to designate a fridge space. So, hey, this shelf is your shelf. You can put all your stuff on this shelf. You want to make it known what's the trash day, how to clean the common areas. Are we rotating? Like, one week I'm cleaning it, the next week you, and we just go rotate every week? Or are we going to hire a maid and split the cost? Right? So, if you're doing the maid option, then be upfront about it that, hey, every, month we're going to spend $200 for the maid to clean the entire house. There's four of us. We're going to split it to be an additional $50, right? Because that could create conflict, and that's the easiest. And, from my experience, like, unfortunately, when you rent by the room, they kind of treat it like a hotel. Like, they aren't going to, clean their bathroom as well. They're not going to clean the common areas if they make a mess. So just something to be careful about. Like, when I was house hacking, definitely I was cleaning a lot. Like on the weekends, I would clean it myself. And I'd be happy to, right? It was my first property. I was very excited to get the income, and it was nice to get $3,000 a month. But I would have to clean the kitchen. I would have to mop the floors, clean the restrooms. But eventually, I got tired, and I just said, okay, well, let's just hire a maid, and then we're going to split the cost. And just be upfront about it. Some people might argue, no, I don't want to be included in this, but some may be open to it. But I usually try to make it clear up front that, hey, we're going to split the cost of a maid. Or you can just increase the rent and say, hey, this includes monthly maid cleaning service so that the house is clean, right, and maintained. And then you want to talk about quiet hours. When there are quiet hours, is it 10 p.m.? What's the policy on bringing over guests? You want to be respectful of other people as well. So for me, I basically said no to guests. Um, because like I said, it compromises privacy, and there's other people living there. If they wanted to talk to guests, they can go outside. And, there was a nice park nearby. So for me, I was a hard no on guests, because it creates conflict, especially when people start bringing guests over, and they get rowdy, and you don't know who these people are, right? Like they're in your house, these guests, and they could steal something, trash something. So for me, I was pretty strict on that. And usually I haven't had any issues enforcing that policy. Like they usually wouldn't bring it. And then the last step is you want to make sure you collect your money monthly, right? And set expectations. Like you have to pay by the first of every month, and it'll be late by the fifth, and the late fee is $50 a month, or $50 if you're late. For me, I prefer to be paid electronically through Zelle. It's really easy if you have Chase, Wells Fargo, any big banks, Bank of America. You can actually, they just can text link the Zelle to your phone number, and they can pay you directly, right? And you actually can set up auto pay with Zelle. So everything's electronic, it's documented, it's easy for them, easy for you. So it's step number 11. And kind of one tip that I kind of forgot, going back to step 9 is when you're pre-screening a tenant, doing the in-person viewing, what I usually do is, if I like the person and they're great, then I would say, okay, hey, I like you, I think you'd be a good fit here, and um, if you want to move into this room, and I want you to place a hold, that's non-refundable. right? So in case you back out last minute, I'm going to keep this non-refundable hold because I wasted time, and time is money, right? So I would say if you want it, I put a hold. I usually make it like, maybe like 20% of what the rent is. So if the rent's $1,000, I'd ask for 200. And I said, the moment you give me the hold and all the documentation, and we will sign the lease, I'll take the ad down and the room's yours, right? Because you want them to have skin in the game. Because like a lot of people will say, "Oh, I want the room," and you text them and you never hear from them, and you wasted all this time. And you stop showing the room. So for me, you have to put your money where your mouth is. So if you want the room, you want the hold, and then give me 20% of the rent. I will sign the lease with you, and then at that point, we will, um, stop showing the room if it's the last room, right? Or that room is yours, and let's say you have 3 rooms available, then they can kind of pick which room they want, right? So it's kind of like a first come first serve, and put your money where your mouth is. So overall, this is just kind of my experience house hacking. This is how I got started in real estate. I was basically buying a single family home. I would live in, like, 4 bedrooms at least, and then I would live in the master bedroom, and I would rent out the other rooms. So I was, typically collecting $3,000 a month to 5,000, depending on how many rooms I had. But I'd be collecting 3 to 5,000 a month. That typically covered my mortgage. I'd have to cover my property tax, my insurance, my utilities, any repairs. So that significantly lowered the cost of my living expense to about $1,500 a month. And remember, you're paying yourself, right? And then on top of that is you're getting the appreciation. You're getting the tax benefits of being a primary, homeowner. And real estate, your monthly mortgage stays the same. Inflation erodes your mortgage amount over the span of 30 years. So it's a great way to get started. And I did that for, like, my first 2 properties, right? I bought a single family home because I relocated for my job, and I did the same thing, right? I rented out, I lived in the master, rented out, like, 4 other rooms, and include utilities, didn't have it furnished. And a lot of these properties built up a lot of equity over the past 5 6 years, and then using that equity, via cash out refinance or HELOC, I was able to pull out the money and then buy my multifamily, right? So I'm at multifamily apartments today, but I got started single family homes in a high cost of living area, and thanks to the equity that I've appreciated, I could use that, leverage that to buy myself my first apartment complex, my mobile home park, and my second apartment complex. Right. So, I know my channel focuses a lot on multifamily, but just know that my start is with house hacking, and it's a great way to get started. I get it, it's a little inconvenient to have to, like, rent out rooms, but you can find people who are rarely there. They rarely cook, and maybe they go home when they're not there, right? Like, I've had multiple people where they just work there, stay there 3 days a week, and then they're home 4 days a week, so you don't even see them, right? Like, I had a guy who, he would actually fly home back to Texas from California to see his family every weekend because his work would cover that flight and that expense, and he just was basically there to sleep, eat, rest, and then go to work. So it's a different mentality. Um, you'll find people like that if you're patient, and like, you need to go through short term inconvenience. Like, for me, I was a single guy, so it's a lot easier. But I get it. If you're engaged, if you're married with kids, it's not as fun, not as convenient, but it's still a great way to get extra money a month, right? Like, um, like, they're barely there. If they don't inconvenience you, then you get extra money, and that's how you build wealth. That's how I built my wealth, and it helped lay my foundation to buy my multifamily. It helped lay my foundation to building my net worth, and that's a great way to get started, because how else can you buy a house with less than 20% down? Um, Single families, you can buy 5-10% down. With multifamily, unless you're doing creative finance, it's going to be about 25% down if you're going through a traditional lender, right? And but if you're doing creative finance, then you can get a little bit less. So to kind of summarize, the 11 steps of need to house hack your primary residence. The first one is know your budget. What's your down payment capacity. Number 2 is get pre-approval from your lender. based on your debt to income ratio, so you know how much house you can afford and how much down payment you need. Number three is, find a realtor. Remember to ask for 1% commission to cover your closing costs, because you need someone to write offers for you and somebody to show the house to you, right? Number four is you want to look on Zillow and Redfin in multiple cities nearby where and within a 45-mile radius, and make sure there's at least 4 bedrooms, and there's filters for all this on Zillow, Redfin. You want to go to as many open houses as possible, on your free time, on the weekend, after work. You want to make multiple offers, because you want to get a sense of, the market and what the expected price range is. Just make offers based on asking price, and you'll see how competitive the market is, right? But it's just a numbers game. The more offers you make, it increases your chance of getting a deal. Next is, once you're under contract, you provide documents to your lender and title. Number seven is you want to research market rents, on Facebook Market, Craigslist. Step number eight is you want to create your ad on Facebook Market, Craigslist. Show pictures of the room. What documents do you want? How much is the rent? What's the security deposit? Are utilities covered or split? Is there a maid cleaning service? Is it month to month? Is it 6 months, 12-month lease? Answer all those questions up front, right? And then number nine is you want to start to pre-screen potential tenants on the phone first, and then if you like them, then you can do in-person viewing. If your gut says no, just move on, right? I target working professionals who are rarely home and they rarely cook, right? More privacy, less mess, more income, less drama, right? And then for the ones that you like, require them to put at least a hold on the property, on the room. At least 20% of the rent is what I target. And then number 10 is you want to set boundaries and expectations. So, give them their designated kitchen cabinets. What's the fridge shelf? What's the trash day? Like, how are we cleaning the common areas? Like, when does the maid come? What are the quiet hours? What's the guest policy? And then the last step, number 11, is you want to collect your money electronically, via Zelle is what I use. It makes it easy. You can set up auto pay. Just makes it very streamlined and easy for you. So overall, hope you found value from this video and hope to see you in the next one. Thank you so much. Bye-bye.